Good morning. This is Prieur coming to you from my office in Cape Town. I must say, quite unlike the gloom we're seeing on stock and commodity markets, it's a beautiful early summer day in this part of the world. As far as stock markets go, a host of short-term technical indicators look quite bearish. For example, the S&P 500 index is now trading below both its 200 and 50-day moving averages. As you know, the 200-day is often seen as an indicator of the market's primary trend, whereas the 50-day shows the shorter or intermediate trend. The next crucial level is the October low. That came in at 10.99. In other words, almost 100 points or 8% down from the current level of 11.93. I suppose on the positive side, one could argue that the pullback resulted in valuation levels improving somewhat, and also the overbought condition of earlier in the month being normalized, although not quite oversold yet. But quite frankly, in the short term, it could really go either way. During times of market turmoil and panic, I prefer focusing on long-term indicators to provide some guidance. For example, the chart on the screen shows the long-term trend of the S&P 500, that is the green line in the top section, together with a simple 12-month rate of change, momentum or ROC indicator being the red line in the bottom section. Let me add straight away that monthly indicators are of little help when it comes to market timing, but they do come in handy for defining primary trends. Looking at the chart, an ROC line below zero depicted bear trends quite clearly, as seen in 1994, from 2000 until 2003, and then also from 2007 until March 2009. Now, what about November 2011? Well, we're really on a knife's edge, with the ROC perched right on this zero line. I guess Mr. Market will probably show his hand soon, but until we see a break to the downside of the zero line, the cyclical bullish trend remains intact. For the record, another momentum-based oscillator, the so-called MACD, which is not shown on the chart, has in fact already broken below zero. But I am inclined to view this as a less reliable indicator and would prefer to also get confirmation of the ROC before making a definite call. Needless to say, caution is warranted at this juncture. We'll be watching the ROC very closely, and also, of course, those October lows. I hope to be checking in again soon. In the meantime, that's the way it looks from Cape Town.